I think a lot of it is credit, is the lack of credit literacy and understanding. What is a credit score? What does it mean? How do I get one? How do I maintain it? What is the relationship to paying debts on time to this score, right? I think that's a big piece of it because, again, you don't know what you don't know.
Hello, everyone. Rick Albert here with another episode of Hekedia City of Angels. I have Dr. Jennifer Gormer here. Thank you so much for coming on.
Thank you. Thanks for having me.
Yeah. For those watching, I apologize. I had to pivot, so now I'm in a different location so that my friends that are in this space would hate the fact that the lighting is horrible where I am right now, but they're going to have to deal with it. So all good. All right, doctor. Tell us, you do a lot of things and mostly geared towards the lending community and the African-American community. Can you kind of touch on what you do and how you got into it?
Yeah. As most professionals in this industry, I didn't wake up one morning and say, I want to be a mortgage broker. Didn't happen like that.
Right.
But I fell into mortgages when I bought my first home at the age of 24. I was a mother of 5 at the time and married and said, buying home. And no one in my family had done it before. And I just took that plunge. And then at the time, my loan officer said, you'd be really good at this. And I was like, no, thank you. Running my own businesses, doing my own thing. Don't want to, no, thank you. Just give me my keys, right? But I thought about it. And I was like, maybe she's onto something. So I tried it and the rest is history. But you're right. I do a lot. We serve all customers, but I have a passion for helping the demographics that are struggling to get that approval, struggling to get that clear to close. I believe everyone should have the ability and the access to home ownership. And I have a passion and a strive to make sure that we're helping to close the gap. I founded Black Mortgage Professional Alliance, the Alliance, in 2024. I am the chairwoman of the Black Homeownership Council at the Broker Action Coalition, and of course, the owner and CEO of Integrity Home Lending.
Nice. Now, I have to ask, how did your family react? Because you're saying you're the first in the family to buy something. How did your family react? How did they, when you're like, hey, I'm going to go buy something, what did they tell you? I'm always curious on that family dynamics when you do something different than what everybody else is doing in the household.
Yeah, no, I say this all the time to my customers. If we can get the first person in a family to buy a home, we can change the entire trajectory of that family going forward. And that was the case with me. My mom had never seen it, right? My grandmother hadn't bought, my great-great-grandmother had bought, my aunties, like I was the first person. And so it was a trickle effect. My mom then bought her first house about 2 years later. And because my family was able to see me buy, there came the questions of, wait, if Jenny did it, then maybe we can do it, right? So my younger cousins and generations after me started asking questions. My aunt started asking questions. My mom was like, maybe I can do it. And I said, of course you can. And because I became a loan officer, I closed my mom and her home. So it truly is, I think, definitely scared when you do something that no one in your family's done before and no one can hold your hand and walk you through the process. There's some courage that comes along with doing something new. And saying, it's scary, but I'm going to do it anyway, right? I don't know what I'm doing, but I'm going to do it anyway. And more importantly, I'm going to do what's necessary. And at the time, I was a mom of 5, and I wanted my kids to have their own rooms. And so I literally closed on my first home at 5 o'clock on Christmas Eve. 5 o'clock, I got my keys. Nice. And I went to Home Depot. I called my mom first, crying. She had the kids. I went to Home Depot. I got the very last real tree that they had, drug it into my car. It was like hanging out the windows. Drug it into the house, put it in the stand. We got sleeping bags, and we spent the night in our new home. And when the kids went to sleep, I became sad. But you know what? That showed my kids, like, they were like, our own rooms? Yes, go upstairs. Go find your room. I did it. I changed the trajectory of my family. And so that's something that I like to, it's my goal to impart the same opportunity to as many different parents as I possibly can.
It's interesting that you bring that up because I've talked to some people when it comes to buying homes and they're like, oh no, this home's too small. This is too this. I'm like, oh, my kids wouldn't like it. I'm like, what if you changed the conversation with your kid? What if you told them, hey, look, yes, our place is small, but we own it.
That's it.
There's a difference, right? Mm-hmm. I told my wife, my daughter's 2, totally adorable, focusing more on her dolls than she is on real estate. But I told my wife that she's going to help us with our real estate stuff. Otherwise, she's not getting it. And she kind of looked at me, I'm like, I'll donate the properties before it goes to her. If we had to work our tails off to get it, so is she. And she's not going to have to work nearly as hard.
Right.
My favorite story that I tell people is when I was saving up to buy my first place, didn't have a lot of money, and it was like my best friend's birthday. And I'm like, I want to get him a cool gift. I don't have any money. I'm saving up to buy my first place.
Right.
So what I did was I did a full presentation making fun of him because that's just the type of friends we are. But it was actually on his bucket list to tase someone. And I'm like, you get to tase me. He already had a taser. Didn't cost me anything except a little bit of pain. And he started crying. He was so happy. And the best part, it actually didn't hurt as bad because he was too nervous to do it. But I don't care. I was like, but it's those stories we get to tell. Okay, these are what we did. This is the sacrifices we made to get where we are.
That's it.
You know, and I don't think enough people have those conversations. They look at just the end product. They don't know everything that came up to it.
That's it. That's it. And to be, anything that's worth having is worth sacrificing for, right? And so I love that. It's like you were sacrificing and saving for this home. And I love my friend. I'm going to celebrate with them, but I'm not touching that nest egg over there because I've got to show up at the closing table. I need this money, right? And I think that's part of why I'm so passionate in advocacy as well, because again, if you don't know, you don't know, right? How can we hold someone accountable for something that they don't know? So if we have a demographic that's not educated, that doesn't understand credit, if they've never seen someone buy, they don't have any idea what a credit score is and what it needs to be and what's AUS, what? And if they don't know, they don't know, right? If we can start educating our college graduates, it's, hey, go ahead and contribute the maximum to your 401k because your company's going to match it, right? And then guess what? Let's do the math. And in 2.5 years, you'll have your 3% down and your 3.5% down. And now let's talk about you buying a house. Oh, you don't have to buy a house. You buy a condo if you want to. But see how it changes the whole demographic? Like, it changes the trajectory of the family. And so I'm with you. Like, I remember saving. Like, I was going to make sure we got those keys, and we got the keys, and my kids woke up in their own room, right? That was worth it. That was Christmas. So I agree with you.
And a lot of it is I don't expect them to know it, right? I don't fault them for knowing it. So I know in some of the notes that were sent over, there was a 72% higher denial rate. Right. Yeah. And that's more for like minorities, correct? Is that my understanding?
Yes, it is. Yes. Okay. Hispanics and Blacks, but the most recent data. Now, here's the thing. We're not short on reports and data. Okay. Every day of the week, you can get another report. You can get the data. The data's there. The data is alarming. The data speaks for itself. 72% higher denial rates and predatory lending. It'd be one thing if we had one of them, but we have both. And so the question is, why? The question is, what's happening behind getting the predatory lending? First of all, why is it so high? Which I have an answer. Right. And then why the denials? Exactly. So it's okay. Let's talk about affordability. So overarching umbrella of affordability, which is an American issue, right? This is a bipartisan American issue. It's like, how can more Americans afford a home? Okay, but under that umbrella of affordability, we know that African Americans and Hispanics have a higher rate of denial and predatory lending. Why the predatory lending? Predatory lending has to do with the interest rate and the cost of buying a home, and it's predatory. It's gone outside of the box. Let's talk about that. So if a borrower needs down payment assistance, and we give them down payment assistance, and the rate goes up to 7.75 when they could have had a 6.1 or 5.99. Let's really have a conversation about affordability, the rate going up, can you afford it, and getting into predatory lending. There's the conversation, right? Are we really helping consumers if we're going to help them with down payment assistance, but the rate is so high that they can't afford it, and then it hits predatory lending? There's the problem. Right. And so many people don't understand that down payment assistance isn't national. There's not this one national down payment assistance for all bodies. Right. That's not the case. We have local, we have regional, we have state, we have government, we have lenders who give down payment assistance. It's not like one size fits all. And so there lies what we know is affecting affordability and getting these borrowers into predatory lending. Now, denials. Again, we can go and get the data. Like HMDA gives us the data every year, so we know what those denials are. But let's see what we don't know, what we can't dig into just quite yet is what led to that denial. Was it because the file flip referral? and the lender can't do manual underwrites? Or is it that the borrower didn't have 2 years worth of income? Okay, so that's the denial. Okay. There's so many different situations that can lead
Sure.
to a denial. See, we really need to dig deeper. Okay, we really need more of that data. But what we do know is that it's 72% higher predatory lending and denials, which I believe comes from a lack of education, know-how. If you don't have financial literacy, if you don't have credit literacy, if you're not prepared to buy a house, if you don't even know what that application looks like or what's a requirement, you don't understand credit or know what your credit score is. Like, college students, a lot of college students come out, they don't even have a score. Is that their fault?
Right.
No. It's like we have to start to educate first.
It's funny because for the longest time for my rental properties, people are like, what's your minimum credit score that you require? And for the longest time, I'm like, I don't have a minimum. I care more about the history. I'm not going to deny a 20-year-old just because they didn't have history. If anything, I'd rather have someone with a 600 credit score who's never had problems versus someone 100 that had problems. Like, it doesn't make sense. And don't get me wrong, I kind of understand some of the programs where it's, look, it's a higher rate because it is higher risk. Right. So like, where do you draw the line of, okay, it is predatory lending, but I also get it. You're basically doing 100% financing and we don't know where the market's going to go. My understanding is, and just so you know, I'm a smart ass, not a know-it-all. So feel free to correct me if I'm wrong, but some of the higher foreclosure rates happen in the FHA and VA markets, right? Because you're taking on more debt. So where do you draw that line between, is it predatory lending or is it just they're taking on higher risk?
Absolutely. And that's where it comes into, let's talk about compensating factors. Let's talk about preparing your overall credit file so that it's stronger, right? And it's less risk. In most consumers' minds, they would think that, and we've interviewed many, most people would think, oh, if you're getting 100% loan, no risk there. No, that's not how the lender looks at it, right? Like when we get a file, it's not just the credit score that gives you an interest rate. We're looking at how much you're putting down. We're looking at what's the loan to value. We're looking at, yes, your credit score. We're looking at which program. Is it home ready, home possible? Is it home one, which is 3% down for a first time home buyer? Is it FHA? We're looking at more than just the credit score, right? There's multiple assets that we're looking at that's defining this risk factor of this one file. So to your point, you're like, hey, I'm not going to deny somebody 600 credit score, but they've never been late, they've never been evicted. But there are very people in this world who have a 700 credit score, they've been evicted, they can't pay their credit on time, because there's things you can do to get the score up to 700, right? Okay, go pay that collection, pay it for deletion. Okay, pay down your credit cards to get to the 30% utilization. The score just dropped up, and after they close, they're going right back to a 550. You see what I'm saying? So there's so much out there that people don't understand, and risk is one of them. It's every file is not the same. Every file, I can have a Susie and a Bob, and they both have a 680. But the risk in both of those files are going to be completely different. And so you're right. It's about educating our customers on how to look at your entire credit profile. Have you paid your rent on time? Do you have 2 years history? Do we have a third-party VOR? Do you have three months reserves in your account or 401k? That strengthens the file, right? Lowers the risk. If you have a 600 credit score borrower, maybe they put dad as a non-occupied family member who has an 800 score. Now we're talking.
Right.
See,
we like dad.
Risk. Dad has come behind to say, hey, I'll be the non-occupying family member. See, these are things that we need to educate our consumers about. And I believe if we do that on the front end, it's going to help us to reduce the gap, lower the predatory lending, and get more approvals through the door.
Guys, so this is more about, I call it taking a breath. Let's just take a second, and instead of jumping into it, let's actually review what's there in each line item. Is that kind of what you're basically saying? Is, look, there could be different avenues that we can explore, but because look, loan officers are in the business of selling loans. Real estate agents are in the business of client acquisition. The faster they can push these clients through, the faster they get their commission and move on. That's unfortunately how it works. But then you have the few real estate agents where, like, I tell my clients, look, your pre-approval is based off gross income, not net income. You need to determine what your budget is. Like, to be crystal clear.
I love that.
Right? But they're like, no, I got to get into a property, take your commission and move on. And I'm like,
Yeah.
No. And this is, to be fair,
No.
this is why I have clients where I've helped them on 1, 2, 3, 4, 5 transactions, because it's, we help them along the way. So is that kind of what you're seeing, where it's just like these, especially those in minority, where they may not have had the same level of exposure to the housing market, that they're being jumped into it?
Yes. I love what you just said, because I'm an oldie but goodie. Okay. I started in this industry in 2004, right? At the end of 2004, after I bought my house. And you're right. I was in the subprime area. That's when I came into the industry, right? So everybody was getting a house. It was like, oh, everyone, you get a house, and you get a house, and you get a house. Everything was so
your
different.
dog gets a house.
Exactly, right? But I take the same approach. And it's so refreshing to hear you say this as a realtor, because you're right. We approve borrowers on gross income before taxes and deductions, right? Let's just, everyone take a deep breath and just think about that, because that's not what they're bringing home. We're qualifying off of gross before taxes and insurance, but that's not what they're bringing home, right? And so to your point, I do the same thing. So many times on paper, it may look like you could buy a $700,000 house. Oh, you're great. Go shopping. Here's your approval. But if they can't afford more than $3,000 a month, they're not buying a $700,000 house. The paper may say, the numbers may say, but if they can't qualify, so I do the same thing. Everyone in my team, I've trained my loan officers, it's the same thing. My mentees, yes, we qualify. Yes, we approve. But you should always come right behind and say, let's talk about what you're comfortable with paying. What do you want to pay? And what's the absolute max that you can pay? Because you know what's not on credit? Daycare. You know what's not on credit? Your hair, nails, gas, electric, most of the, you see, so there's all these other things. And so you're right. There's this huge gap in between what you were approved for and what you can actually afford. And so if customers are being put into homes that they can't afford, there's a high foreclosure rate. There's a higher risk that impacts the business, that impacts the secondary market. And then the lenders start looking, gosh, you've had a higher percentage of FHA. Maybe it's because they were put into a home that they really couldn't afford. How about that? Let's have that conversation. Right? So it's refreshing to hear you say, but it's so much about, listen, it's about solutions. I was in Washington, D.C. on Capitol Hill, 6 meetings with members of Congress, bipartisan. Do you know every single congressman what they said to me? Literally. Jennifer, we know it's a problem. We know it's a problem. We don't need another report. We've seen the reports. We know the data. It's real. It's live. We hear from our constituents all the time. Bring us a solution. That's what every last one of those senators, those members of Congress said to me, is bring me a solution. We don't want to talk about the solution anymore, talk about the problem anymore. We know what it is. We know the data. It's real. Our constituents are knocking on our doors, sending us emails, coming in person. We know. Jennifer, bring us a solution. That is what we're talking about, is let's get to a solution so we can help close the gap and we can help more borrowers to get approved at the end of the day. So
then when they ask you, what's the solution? What's your response? That's your problem, not mine.
You know, it's quite interesting because I wasn't expecting that. Okay. I'll be honest, but no, seriously, part of the work that the council has done, the Black Homeownership Council at the Broker Action Coalition, for the last 7 months, we've been working very hard in the background, quietly. Our council is made up of seasoned mortgage brokers on the ground, doing the work, grunt work, working with consumers every single day. We have put in 6 to 7 months, started in August of last year, to develop a playbook that would solve and speak to these issues. February the 9th, we released it, and it speaks to just these issues that we've been talking about. Affordability. How can we help consumers who are, again, receiving this higher rate of predatory lending, 72% denials in predatory lending? Let's talk about affordability. And in this playbook, it is a solution-based tool that literally is written for consumers so that they can actually get over the hurdle, get to the approval, and get to the closing and get their keys. So we talk about and teach them about affordability. We teach them about manual underwrite. So in an FHA loan, you apply, you get an FHA loan, and it's a manual underwrite. How do you get past manual underwrite, which requires a lower debt to income ratio, compensating factors so that you can actually get to the closing table? We teach to what is this process and what do you do? We talk to and speak to down payment assistance. We give a resource for mortgage brokers and loan officers across the country so they can help consumers who need down payment assistance. We take them directly to the source so that they can help them find a guaranteed down payment assistance geared to our customers. Okay. So we go to the heart of it. So yeah, we know the issues. This playbook is built on solutions. We talk about and give solutions on Okay, listen, so we all know affordability is out the door, right? Prices are raising. I live in Texas. I get it. Our housing prices are increasing. It just is. That's a whole
Yeah.
different conversation. But in the playbook, we
That's the
talk
next
about
episode. Don't worry about it.
next episode. We talk about ADUs. There are solutions too. So you can afford a $700,000 house, but can you afford a 250 ADU? And most consumers are like, what's an ADU? So we educate on what an ADU is. How do you find it? How much, how can you save? How is it beneficial? How does it get you across the finish line, right? And then, of course, we end it with, so we talk about down payment assistance. We talk about ADUs. We talk about affordability. Our legislative topic this year that we're taking to the streets in Washington, to members of Congress, is the rising cost of insurance. We have down payment assistance, the rate goes up to 7.75. But my God, if the insurance is now doubled and tripled, we need to have a conversation about affordability in this country for borrowers to be able to buy homes. So this solution, this playbook is a solution. It is literally a tangible solution that we're putting in the hands of not only mortgage professionals, but was written for consumers so that they can get their hands on it. And we're sharing it and we're speaking about it and we're putting it in the hands of our consumers. 3, 6, 9 months from now, they should be able to go ahead and apply, get that approval, get the keys, get to the kid to close, and slowly but surely, closing by closing, family by family, we're closing the gap and we're getting past the predatory lending and we're getting past the denials.
Okay, that makes sense. And I'm a big fan of ADUs. I personally had one. I actually just sold it.
Yes.
But we actually started off in our ADU. So my wife and I moved into our ADU and rented out the main house, which my wife was not happy about because that was not part of the plan. But I was like, because we converted the garage into an ADU, did a remodel in the house. We did the FHA 203K program. And of course, over budget over time. So we were like dirt broke. We literally just got married. The house was basically done. I'm like, we're moving into the ADU. And she's, well, what? I'm like, yeah, we're going to move into the ADU. Because I just learned about the FHA streamline refinance where they don't require an appraisal because this was 2019 where ADUs were new. So there was no comps. It would never appraise. And we lived there for 2 years, went through 2 refinances, then moved into the main house. And then we recently just sold in for the first time in 10 years. I'm not house hacking. It's weird. I have a garage. I'm like, this is so cool. I actually have covered parking. This is weird.
This is great.
But cool. This is cool. It feels right. But yeah, I think that's a lot of it, right? It really just comes down to the education. And then some of these people come from a background where they may not have been exposed to it. Because I've talked to different people and for different backgrounds, and there are a lot of resources out there. But then I also feel like for me on the educational side, the STAR testing or like the student testing is like totally bonkers to me. It's okay. The more the higher the score, the more money the school gets. But then that means the ones that scored lower need more resources, but they're not getting the resources they need.
That's it.
I don't understand.
I don't understand. Yeah.
And I feel like that's kind of like the start of it, of like where there's like some disconnect. I could be wrong, but it's just like intuitively, right?
Yeah, I get it.
So what have you been noticing? Have the hiccups been on the credit side? Has the hiccups been on the income side? Like where have you seen the improvements really need to be made in some of these communities?
I think a lot of it is credit, is the lack of credit literacy and understanding. What is a credit score? What does it mean? How do I get one? How do I maintain it? What do the relationship to paying debts on time to this score, right? I think that's a big piece of it because again, you don't know what you don't know. I was fortunate enough that my mom raised me to say, you can do whatever you want to do. You're brilliant. You're smart. Go do it. Figure it out. No one can tell you no. That was ingrained in my head. So even though it was scary and even though I didn't understand, I made it happen, right? In my 20s as a mom of 5, everyone can't do that, right? And so some people need the education. Let's face it. I have an education background. Most high schools are not teaching credit literacy, financial literacy. They're not getting it, right? Let's not even talk about in college. Again, I'm a professor, have been a professor for 6, 7 years. Listen, again, I could tell you I've taught in major institutions of higher education. I can't remember one course that was on credit literacy. I can't. So
no one talks about it.
Yeah, where are they going to get it? They're going to get it from their family. And if they don't get it from their family, who else is going to teach them if we don't teach them? So we are in the industry. I think it really comes down to credit and financial literacy. Then I think it's also just understanding what the process is, because everyone wants to have a piece of the American dream. Everyone wants to have a home, right? It's the largest transaction they're going to ever make in their lives. It's a roof over their heads. Everybody wants their own home. But if they don't know that we need 2 years, right? If they don't know that, you know what, but we can use you being in school as part of the 2 year history, right? It's even as simple as things like this. Some consumers actually think they should buy the car first, then the house. Holy backwards. Please don't come apply and tell me, I just bought a car. Oh God. Oh no. Why did you do that?
We bought it to celebrate.
Don't do that, right? So it's this whole idea of credit, education, literacy, because those are different. You can be educated, but if you're not literate, literacy. So it's credit, it's finance, it's what does the home application process look like? What do I need to do before I submit the application for approval? That's the piece we're not talking about. I believe if we get to our consumers 3, 6, 12 months before they hit the submit button, we can completely obliterate the 72% higher predatory lending and denials. I believe we can, but we're gonna have to start before they hit the apply button.
I really appreciate that, because that's one of my hardest conversations I have with buyers. Because I was like, why don't you talk to a loan officer? I'm not saying you need to buy now, but we need to see where you're at. And then we can create a game plan on how to improve those areas. But for a lot of them, they don't want to do it. They're concerned. They feel like they're locked in. They feel like, oh, it's going to hurt my credit score. There's all these factors. I'm like, all this is free. It's a soft credit.
That's right.
Even if it did hit it, you make one car payment and it bounces back. It's not that big of a deal. Like I remember with the house we just recently bought, and I tell people I annoyed the crap out of my loan officer because I actually talked to him about a year before.
Really?
We bought.
Love it.
Yeah, because we owned rental properties. We owned our current home. But I'm like, I need to see where we're at. And then to your point, we got approved for significantly higher than what I was expecting. Yeah. And I'm like, there's no way on God's green earth I'm getting there. No way.
Yeah.
Like, it was wild how much we qualified for, because they take averages, this, that, and the other. But I'm I'm not touching that price point. There's no way.
No way.
No way. No way. But I wouldn't have known had I not started that conversation. Because then I told my wife, hey, let's casually look at open houses. We only looked at homes that were easy to show. We never, because we didn't want to bother anyone, because I needed to know.
Yeah. No, agreed. My husband was
hard to get.
Yeah.
Yeah. I was like, I'm a planner in that respect. I'm like, I have to know, but it's very difficult, I've noticed, to get buyers to be like, look, you're 12 months out. I get it, but you need to have those conversations now.
You have to. And it's okay. It's okay to be 12 months out. It's okay to be 3, 6 months out. It really is. I tell my customers all the time, I believe it's either you're approved, I've got you approved now, or I need you to go do A, B, C, and D, and then I'm going to have you approved. Right? Whether that means, hey, you need another 3 months on your job, you need another 6 months on your job, or you know what? Hey, in 6 months, 12 months, you're going to have this much in your 401k. Did you know that you can take that out so that you can buy the house? So let's put the game plan together. Okay. And in the meantime, don't pass go, don't collect $200, don't get new debt, don't go buy a new car. It's preparing them, because people don't know. People really, I will tell you, I had a customer that they were supposed to close. They were really supposed to close this week. Husband was on the loan, wife was not. You know what the wife didn't know? And so she made decisions that impacted the loan. The husband didn't know that the wife was these things. It's an FHA loan. They got so frustrated. Well, the husband got so frustrated. He's listening. You know what? I throw my hands up. Wife's over here doing this. I'm not buying the house. She didn't know. You see what I'm saying? So if we can get to them early and say, hey, don't do that. Don't do that.
Right.
Stay right here in this box. I will get you close. And so it's a lot about education, right? And what's available, whether it's, do they even know what an FHA loan is? Do they know that there's a home one loan that's 3% down instead of 3.5% down, right? You know what was huge for me when we had the 1% down loan? I was knocking those things out like crazy. Customers like, what, 1%? Yeah, 1%. Yeah. Were there stipulations? Absolutely. Did you have to be a first-time home buyer? Absolutely. But my God, 1%? Buy a $300,000 house and you put down $3,000? Let's go. But if they weren't prepared, they couldn't take it advantage of that, right?
Right.
So you're right. It's about education, but it's also just, it's not enough just to get our customers to the closing table, hand them keys, and be like, bye, never talk to you
Right.
again. No, we also need to educate our customers on beyond the closing after they get the
Sure.
keys, keeping the home, right? And not only keeping
Yeah.
the home, but getting to a place like you are where, and all buyers should know this, right? Every house doesn't have to be your forever home, but it's always an investment. Sometimes you're going to stay in that home 3, 4, 5 years. You're going to sell that thing, make your money, go back and do that thing again, right? And some people do it 3, 4 times. But again, it's that education piece, and I believe that's what's missing. And so that's why we're putting all of our eggs and our energy into advocacy, into educating the people who have the power on Capitol Hill to make large scale trickle down decisions, but letting them know what's happening on the ground as the professionals. And then at the same token, educating from the ground. So we're advocating from the top down. We're doing the work from the ground up to hopefully meet in the middle and close the gap.
Yeah. Nice. Okay. Because I always like, it's funny when I talk to people about, oh, there's the 1% down program. And I'm like, look, if you can afford it, go for it. But also plan on holding on to the property for a long time. This is not a own it for a couple of years and then you're going to sell, because you are leveraged pretty high. There is some level of risk in that regards. But typically when people ask me about the housing market, oh, is the market going to crash? Is it going to be this? Is it going to be that? And I'm like, first of all, if the market crashes, it's a paper loss. To be clear, you're not losing your house. No one's taking your house away. You won't be able to refinance or sell. Sure.
Right.
It's funny, as an investor, people have asked me like, hey, what if the market crashes? All your investments go to crap. I'm like, no, I just hold on to it. If people lose their homes, I now have a bigger pool of tenants. The tenant pool, I'm like, and if I have some cash side, now I can start buying more properties. It's almost like I don't want to bank on the market crashing because I know that hurts us. But on the flip side, I'm also, you can capitalize in any market, right? You'll be fine.
Yeah.
Have people had that concern of, if I'm only putting 1% down, I leveraged beyond what would be considered acceptable by today's norms. How do you have those conversations of, there's some level of risk there?
Yeah, luckily, most of my clients that took advantage of the 1% downs, when we had available, and it was an amazing opportunity. Most of those buyers were the second half of their life, and they were looking for their forever home, which made sense.
That does make sense. It makes total
sense. But when
sense.
it was the younger generation, first home, I always sat down. I take it upon myself to educate. I have a background in education, so I'm always educating my borrowers throughout the process. And we have that conversation of, okay, you're putting 3% down. Okay, let's talk about APR. Let's talk about amortization. Let's talk about what you're going to be paying over the life of the loan. Let's talk about some things you can do to take this 30-year and convert it to a 16-year. So we're always educating our borrowers, again, beyond the close date. But when you have the sophisticated borrowers who, like you said, are like, well, this is really good. Again, I'm going to tell you the information. I'm going to educate you. I'm going to give you every option that you have available to you, and you make the best decision for you and your family. Now, if you ask me my opinion, I'll give you my opinion, but my job is not to tell you what to do. Right. So I think it's about every customer. Every customer is different. Some customers come in with experience because they've seen their parents and their grandparents and their aunties and their uncles buy, and they've educated them. But then you have a lot of borrowers, especially in this demographic, where again, they're the first one in their families. So they don't know what they don't know.
It's interesting. There was always the argument of, should you put more money down or less? And one strong argument to put the least amount of money down is having the cash reserves.
Yes.
What good is putting 20% down and not having any money in the bank?
That's
We're looking at a difference of $50 to $100 a month. If it means you get to have that much more cash. Because yes, we're in the 6% range. Yes, that's high interest rate. Not over the course of 30 years, but over the course of 5 years. It feels high, but that's still fairly cheap money.
Listen,
if you're into credit card debt, go for it. Go for it.
Yes, that's what I was going to say. Again, I'm old school, okay? So I started in 2004. I remember people were buying houses at 10, 11, and 12% and not blinking an eye before Dodd-Frank came in 2008 and said, something's wrong with this process, y'all. So when people say to me, like, rates are high, I always get back, no, they're not. No, they're not, because I still am in contact with my very first family that I closed in 2025. Literally, I'm still in contact with them. They kept the same mortgage. They kept the same rate. They paid that home off. They're like, we're not buying another house without you, Jennifer. I remember when people were literally didn't blink an eye buying a house at a 10% interest rate, right? No, we're not high as 6%. We're not high at 5%. And guess what? There's this little thing called a temporary buy down. So if you are a first time home buyer, it helps you get into that loan those first couple of years and get settled, get your bearings of buying a home, and perhaps even refinance after 2 or 3 years and then get an even lower interest rate. See, we didn't have any of those things. But when you compare a home loan interest rate, even if you're at 6, even if you're 6.5, 6.75, 6.99, what if you just said it? What about your credit card interest rate? Let's have that conversation, right? Let's have your car note interest rate. Let's have that conversation. That's why refinances exist, because you can consolidate, pay that stuff off, leave a 20, 25, 29, sometimes even higher, and refinance that to a 6% in your mortgage. Stop it. Financial literacy.
Or you could do what I did. This is the second time I've done this. I actually raised my interest rate so the lender would give me a credit towards my closing costs.
That's it.
And then I fixed up the place. And now I'm in the process of refinancing.
That's it. That's so smart. That's it.
Right. So it's like less cash up front, out of pocket. I'm now going to I should be able to hit the 20% mark. So I should get my PMI taken off. If not, it's going to be by like this much. And I'm going to be super pissed. So then I would have to decide, okay, do I drop a few extra $1,000 to get rid of it? Or what I've done before with the refinance, the last one I did on my last house, I was short by 10 grand. I was super pissed just because from an appraisal perspective, like really appraiser, like $10,000 in LA terms is not that much. You probably could have made an adjustment to like compensate. Let's be real. But I talked to my loan officer about it, and it was like the PMI was, I don't know, $100 a month. And by the time with the loan buy down, by the time I got to 10,000, it'd be a few months from now. So I'm like, whatever. A few months later, I called, we moved on with our lives. I got over it very fast, but I was pissed for 30 seconds. Right. I was just like, what is this? It's ridiculous. So I'm hoping to accomplish the same thing. So what advice would you give minority buyers today? If they were really like, they're like, look, I don't have this background. I'm first generation US, right? Or I come from a background of Section 8 or background, whatever. They know what they really know is they don't want history to repeat itself. That's what they know. So they need to know, how do I get out of that? Because to be fair, in some cases, and again, correct me if I'm wrong, they're not in the circle of people, society, wherever they are, where like they're either encouraged or they just don't know.
They just don't know. Yeah, absolutely. Easy, really easy. So one,
go for it.
Take the plunge and just go for it, right? Ask for help. You can find loan officers where you can pick up the phone like me and call and say, listen, I have questions. I want to buy a house. I don't know where to start. Can I come into your office? Can I have a consultation? You absolutely can. No pressure. Let's have a conversation. Let me educate you, right? Number two, you get the playbook. Get the Closing the Gap playbook that is produced by the Broker Action Coalition. It is absolutely free. You can go to brokeractioncoalition.com. You can, at the top, you'll see the tab for the playbook. Click the tab, put your information, download it, get reading, start and do the work. It literally walks you through how to get through FHA approval, manual underwrite, affordability, what's down payment assistance. We give you the solution, right? That's what it's meant to be. Number three, come to our conference. The Broker Action Coalition has released the playbook. The BMPA, Black Mortgage Professional Alliance, which I founded, we have restructured and rebranded our annual conference to become the Minority Homeownership Conference. Once a year, we're traveling the country, and it is focused and based on the need of minorities who want to purchase a home. And so no matter where you are in the country, you are welcome. Come, show up. We're going to be sharing the playbook. I'm going to be speaking about it at the opening. We have lenders coming. We have insurance coming. We have title coming. We have brokers coming. We have loan officers coming. Everything that you need, real estate agents, you name it. If you're a minority and you want to buy a home, you need to be in the house, because it's all about educating you and helping you to take that next step to become a homeowner. So take the plunge, take a deep breath, do it, ask for help, get guidance, download the playbook, and be at the conference and get yourself a house. We will help you with the right guidance, financial literacy, credit literacy, and with all the right people in the room, the Alliance, I founded the Alliance to be not in a trade association, we're just that, an alliance. Like-minded folks, everyone who touches a file. If you're an investor, it takes more than just your loan officer, right? It takes a lot more people than just your loan officer to buy your house. From the time that you hit that submit button on the application to the time you get to close in and get those keys, you've had a loan officer, processor, underwriter, closer, funder, real estate agent, insurance, title. It's all of us. It takes all of us to get you to the closing table. And that is why the Alliance was created, because we're doing the work. And if we're going to close this gap, and if we're going to help more consumers to get past the predatory lending and to get past the denials, it's going to take all of us to help these consumers to get there, be there at the conference.
Okay, perfect. Thank you so much for coming on the show. How can people get a hold of you?
Yes. So they can get the playbook at brokeractioncoalition.com. You can get in touch with me. Go to our website, blackmortgageprofessionalalliance.com. Our name is our website. You can find me on all social medias as Dr. Jennifer Gormer, but you can find the BMPA at BMPA_alliance, all social medias. Google us, you'll find us.
Perfect. All right. Thank you so much for coming on the show. This was amazing. And thank you everyone for watching and listening. And I'll talk to you next time. Maybe we'll talk next year, see how these conferences are going and see what if the percentage has changed and see what kind of progress we're making.
That's what we're here for. I'll hold you to it.
Perfect.
Thank you.
All right. Thank you.
Want to keep unlocking the secrets to building real wealth in Los Angeles? Stick around for the next episode. Tap the video on screen to keep watching.